Alright, what's going to happen now? We're going to go on to chapter 2. Chapter 2 starts on page 129. And what we're going to talk about is, in this chapter, what you did in the first chapter is you found how you got paid. Okay, and that was your gross pay. Now you're going to figure out your net pay. And what that means is that I'm actually going to, after all the deductions that happen, those of you who work, on your pay stub, you should have stuff that is being deduced from there. Like federal income tax, state income tax, Medicare, Medicaid, stuff like that. That's all things that come out. On my pay stub, for instance, from the school, there's about 10 or 15 different things that get deduced. I have a long-term disability that comes out of there. I've got an annuity, which is like a glorified savings account that comes out. When my daughter was younger, I had to have child support come out of my paycheck right away, so that way I didn't have to worry about it. It just came right out. Those are all deductions. Okay, health insurance. If and when you guys are able to get health insurance, because right now you guys should all be on your parents, but when you get health insurance, all that stuff gets deducted. Okay, and that's what this chapter is going to be about. The first section that we're going to focus on is just on the federal income tax. Okay? On those of you who work, do you know what federal income tax is abbreviated on your pay stub? What is it? Okay, Brandon, you're saying FD? Something like that. That's actually what Social Security is. Okay, but we'll get to that in another section. Federal income tax, take a look at the letters. It's FIT. FIT. On your tax statement, unless it actually types out federal income tax. I've seen some that have said Fed income tax, so they shorten it that way. But a lot of times, like on mine that I've had, it says FIT. And that's what means federal income tax. Your person who does your payroll is responsible for deducting the right amount for you. And what happens is with this is that sometimes they have programs that will help them, but realistically, there's tables for all this stuff. So this section, there is not a formula. We have to look up the number in a table. That's what's going to happen. So it talks about on page 129, it says, federal income tax provides money to pay for federal government agencies and services. The law requires employers to withhold a certain amount of your pay for federal income tax or FIT. The Internal Revenue Service, or the IRS, provides employers with tables to show how much money to withhold. The amount withheld depends on your income, your marital status, and withholding allowances. You may claim one allowance for yourself, and if you are married, one allowance for your spouse, and you may claim additional allowances for any others you support. Who are others that you support? Children, right. For me personally, my daughter's too old, so she's on her own, but I could claim up to 5. Why? Me, my wife, and my 3 boys. So I could. I don't. When you fill out your what is it, the I-9 or W-2, when you first get hired, you fill out a piece of paper for federal income tax and you claim a number on there. Some people claim a 1 because you're one person. Some people claim 0. You can claim 0 also. What 0 does is that it withholds money at a higher rate out of your pay stub. Why is that important? If you claim 1 or higher, sometimes, you get more money on your pay stub, but then you might not pay in enough when you do your tax return after the first of the year. I've had that happen where I actually had to pay in one year because I accidentally put 1 down on my one pay stub and I didn't make enough to cover my federal income tax, so I had to pay in and pay them. I have a friend of mine who claims 1 or whatever it was, and I think they had to owe like $20,000 to the federal income tax, the federal government, at the end of the year because they didn't pay enough into the federal stuff. Me personally, I claim 0, even though I could claim up to 5, but I am married, because that's a different tax bracket, but I also withhold at a higher single rate. Why do I do that? So that way I make sure I have enough money to cover all the, so that I don't have to pay in, plus anything I overpay, I get back. So at the end of the year, the last, I don't know, probably 5, 6 years, I think we've gotten back a collective total of close to $5,000 to $6,000 from the federal government because we overpaid. Each year. All right, but then again, that goes towards bills that we've had accrued through that year. So when you're filling that out, when you do that, you yourself right now, unless you have a dependent, you're going to be claiming 1 or 0. That's what you're going to be claiming. If you claim 1, you might have to pay in. You might not make enough. Some of you, I remember when I was your age, when I was claiming 0, I was getting maybe $200, $300 back from the federal government. And when that 1 year when I claimed 1, I had to pay them like $50. I know it doesn't sound like a whole lot, but you know, when you're a college student, $50 is a lot of money, okay? Because you don't have anything. So that's just one of the, there are a couple things that you need to be careful of or cautious of. The page numbers that you're going to look on things on in your book are going to be A2 to A5. That's in the back, okay? When you look up the numbers, we're going to the back of the book to look up on those page numbers. A2 and A3 is for single people. A4 and A5 is for married people. It will tell you if the person is single or married. Okay? On the first one on the bottom of page 129, they say, Dan Kane is a welder, is married, and claims 1, and earns $390.50. So, he's married, so we have to make sure that when we go in the back, that we go to the married part, claims 1, and he earns $390.50. So now I'm going to take my book and I'm going to go back to page A2, A3, A4, A5, and figure out how much we need to withhold. On the book, if you look at the pages, okay, they're you can kind of see it. They're the orange ones. Okay? So, I go, oh, look at there, I open right to it. This might be a beneficial time to put something in there so that way I don't have to flip back and forth and I can actually have it open. So, here's what it has. It has married. Okay, everybody see the married part? Now here's how you read the chart. It says at least blah, but less than this. Okay? It says at least, but less than this. Bless you.
Thank you.
So when it says at least, but less than, when we have that number in there, that $3.90.50, we need to figure out where does it fall in that category. So when you scroll down the side, it's at least $390, but less than $400. Because is $3.90.50 more than $3.90? Yes. But it's less than $400. So what I do is I go to this column, or this part right there where it says $3.90, but less than $400. And now, how many claims did he have? 0 to 10. He claimed 1. So on that column, you're going to scroll over on the $3.90 to $400. He claims 1. And how much money gets deducted from his paycheck for federal? How much? $18. The answer is 18.
Do you get all the federal back?
Not all of it.
Just a little bit?
Yeah.
So how do
You get whatever you overpaid back.
how come they don't just have it set up so you pay what it is instead of overpaid?
Because different things may cost different money throughout the year. So it adjusts, it fluctuates. When you own a house, for instance, it does a lot of that too with escrow. Like I pay into in my house payment, it's like $1,100. $400 of it goes towards the principal, $400 of it goes to interest, and then another $300 goes to the escrow account. Escrow pays for homeowners insurance, it pays for my taxes. Those things fluctuate. So sometimes I might have to give them an extra check at the end, or sometimes I might have overpaid, so then they give me the refund back. And then they adjust my payment, and then, so things cost differently or things change throughout the year. Okay, number 2. Angie Kim is an executive assistant. Does it matter what she does? No. It's the same thing regardless of the job that you have. It does not matter. The thing that matters for Angie is she's single. And she claims 2 allowances and earns $435.95. That's how much she claims. So when I go to the back of the book chart, bless you, what 2 numbers is this in between? Now, this is in increments of 10, just so that you know. Bless you again. So 435.95 should be between what 2 numbers?
435.
Too big. That's $100 in between there. They're in increments of 10.
430, 440. Okay, so at least 435, but less than 440.
Okay, close. I like the 440, but it wouldn't be 435 and 440. It'd be 430 to 440. Because they go by tens, column. So on the chart, it'll say 430 to 440. Okay? So when I go to 430 to 440, don't forget I gotta go all the way over to 2. How much money gets withheld? Oh, wait, I forgot. Here's what I just screwed up. I was on the married column. And when Brian said $34, I looked at him and I was like, nah, I got 15. And then I realized I was wrong. Doesn't happen very often, so you might want to remember that. But in this particular case, if you're in the wrong chart, will you get the wrong answer? Yeah, I would have. Okay? So 430 to 440, claiming 2. How much did you say?
So we write down less than 430?
No, you know what? I'm just wanting to know how much money is being withheld. So how much?
$31.
$31. Okay? So $31 is my number. What do you think? Easy? Good.
Where
'Cause
did
this is-
you get the how did you get the at least and less than things?
That's on the side of the chart. It says at least 600, but less than 610, like on this first one.
Yeah, but this number right here says
So it has to be what number, where does that fall in between the 2 numbers? It goes in between 430 and 440.
could you explain it a bit more? Because
The number is 435, and it goes in increments of 10.
Just throw it back.
So it goes to 440, and it goes to 430, because all the increments are in increments of 10. So where does your number that you make in a week fall in this table?
oh, now I get it.
Okay,
Right.
Colin?
So, the first one we did, we actually wrote down at least 390, how come we didn't have to do that for
I just did it so I didn't have to write it out or show you the chart.
Oh, okay.
Because when I do the picture, then it stops what I'm doing on the other side of it.
Okay.
Okay? So that's why I did that.
Can we still do that?
If you want to. Yeah. But realistically, the answer is how much money is being withheld. Okay? Then, on the next page, there's also a percentage method, and some places do this. It says some companies use a percentage method instead of the tax tables to compute the income tax withheld. With the percentage method, you use taxable wages to find withholding amounts. Taxable wages depends on the number of allowances you claim. Use figure 2.1 to find out how much is withheld for a single employee paid weekly. Each weekly allowance is $63.46. The taxable table that they're referring to on 2.1 is right on page 130. It's actually in the example. That is the table that they're referring to when it says that. Now, for a taxable allowance on something like that, it says that the number is $63.46. That's what you're going to use if it says the percentage method. If it does not say the percentage method, what do you use? The tables we were just looking up. There is only two problems that you'll use the percent method. 13 and 14 are the only two problems that you will use the percent method. Okay? So let's do number 13. 13 says on page 131, Bob Mound, a theater director, is single. He earns $792.02 each week and claims one allowance. So first of all, we are going to find the allowance amount.
Wait, where is this?
It's number 13 on page 131.
Alright.
So to find the allowance amount, the first thing that we're going to do is we're going to take the number of allowances and multiply it by $63.46. Now, just so that you guys know, a lot of times what this book publisher does is they will use the numbers straight out of the IRS. At the time of publishing, they will put the numbers in there for all this stuff. When we do a Social Security and all that other numbers, all that's exactly what happens in real life. So that's $63.46. If you are a business that does it by taxable wages, by percentage method, that's the same number that they do here. So at Marketplace, if they do it by a percentage method, which I don't know if they do or not, but if they did, that's the number that they multiply it by. Okay? So how many number of allowances did Bob have? He had one. What's one times $63.46? Right, that one was pretty simple because we didn't have to multiply anything but other than one. Then, from here, to find the taxable wages, what you do to find the taxable wages is you take your gross pay and you minus out the allowance amount. So, how much did it say Bob made in the week on number 13? And 2 cents. That's okay. Minus $63.46. Where did I get the $63.46 from? The first thing we did. Yeah, Jordan. So what is 792.02 minus 63.46? Brian, can you say it one more time? 728.56. Thanks, Brian. So that's the taxable wages. So Bob is going to get taxed on $728.56. He is not getting taxed on his initial pay because he has one allowance. Now, think about this. If you had 3 allowances, or in my case where I could do up to 5, then what would happen is I would take my number of allowances, 5, times the 63.46, and I would get a bigger number that I did not have to be taxed on. I would only have to be taxed on just whatever was left over rather than a bigger number. But because I claim 0, I'm taxed at a higher number. That's what happens. Okay? So far, you have found the amount of allowance, you found Part A, and you found Part B. Part B was the taxable wage. Now we need to figure out the amount withheld for federal income tax. Here's the part that is going to be confusing. Because now it comes to the chart. And the chart again is on page 130. In there it says, the weekly taxable wages. If you're over $51, but not over $195, you will go to the first line. Where does that number fall into? Does that fall into play? Does the 728 fall into that category? Is it from $51 to $195? No. Then it says from 195 to 645. Does my number still fall into that category? Then it says 645 to 1482. Do I fall into that category, or does Bob? Yes. Okay. So now we're into the final line, and it says $81.90 plus 25% on anything above $645. That's what he gets taxed on. Or that's how much it's going to cost.
Wait, where do we get the 81?
I'm reading it right out of the chart on page 130, the last line. $81.90
Oh,
plus
right.
that. Okay. His number was, as Brian told me, 720 something point 56, 728, right? Okay. So, first thing that you need to do in order to calculate this is what is 728 and 56 cents minus 645 bucks. $83 point what? 65. Okay. Then we need to take that times 25%. Why did I put it as 0.25 instead of 25? Because I moved the decimal over. Right. Good job, Francis. So what is 0.25 times 83.65?
20.9125. So,
20.9125?
Yep.
So 91. Why did I lob it off at 91 and not do anything more with the 25? We're dollar amounts, right? And the 912, the 2 does not bump the 1 up. That number that you just found was 25% on anything above the 645 bucks. That's what you just found. Then you have to take $81.90, because that's what it said, and plus that number. So what's $81.90 plus $20.91? $102.81. Okay. And that's part C. 102 and 81 cents. So on number 14, when you do that problem, you're going to set it up the same exact way. You have to find the amount of the allowance, then you have to find the taxable wages, and then you have to figure out where it falls in the category. That's what you have to do for number 14. 13 we just went through. On 5 through 12, that's you reading it out of the chart from the back of the book. So all you got to do is look it up on the charts, and you guys seem to be fine with that. But this taxable wages by percent method is a little bit trickier. Okay? So on page 131, you're doing 5 through 14.